For some insights on the Fed's inflation fight and the impact on rates, I want to bring in Priya Misra. She's the fixed income portfolio manager at JPMorgan Asset Management. Good morning to you.
Morning.
It is the front page of the FT this morning. Yellen says many Americans still struggling with inflation. Fed officials were open to further U.S. rate rises to quell inflation. Is there any way this is actually going to get better?
So I think it is getting better. It's getting better slowly. So when I look at the inflation numbers, clearly it declined very fast at the end of last year. That progress stalled in the first quarter. But we feel very strongly you shouldn't extrapolate from that, because if you see the last inflation report, that did slow down. We're back to monthly numbers around 0.3, so better than the 0.4 that we were seeing in the first quarter. The other thing I would highlight is if you look at how concentrated that inflation number is, of the 3.6% that we're seeing in core CPI, 3.3% of that is really coming from shelter and auto insurance. Now, we have to live somewhere and we have to drive a car. So I get that these are very important components, but they are lagging components. The fact that home prices have stalled when we look at the high-frequency measures of rents, they're actually slowing down. That's going to feed through into shelter inflation. Right. It's happening slowly. I think the Fed is trying to be patient. They have to say that if inflation starts to re-accelerate, they'll absolutely hike. I think the market got a little too nervous around the minutes. Since the minutes, after that meeting, we've actually had a payroll report that's suggesting some growth moderation. We've had an inflation number that's showing it. I think the market is getting nervous around Fed rate cuts. It's going to happen. We think by the end of the year, they'll be on to cutting rates because they're going to look at that cumulative progress.
Two things going on. You have your boss, Jamie Dimon, on one side, who I don't think thinks it's coming down so quick. You can tell me otherwise, but we've seen some of the commentary that he's made even on our air just in this last week again. And then you have firms like Morgan Stanley, which thinks like the whole thing is going to roll over by the end of the year in like the fastest, quickest, crazy way you've ever seen. So who's right?
So I think the market's very much in the soft landing.
Your boss or not?
Right. Well, your boss or Morgan Stanley, exactly.
When Jamie thinks about all the outlook, the entire distribution of outcomes, he has to look at the outcome where if inflation doesn't slow down, what's going to happen? At that point, the Fed doesn't cut rates. I think the entire soft landing is predicated on the Fed starting to ease off. It all comes down to is monetary policy restrictive? And I think this is where we looked at the Fed minutes. The Fed's debating it. The market's debating it.
The Fed thinks it's much more likely that it is not restrictive yet. They're kind of rethinking what they've been saying.
So they're debating it. I think that the tricky part is it is very restrictive for some parts of the economy. It is not restrictive for some other parts.
And I think this is part of the problem. There was a really good piece by Ben Emmons last night kind of laying this out, saying what we saw yesterday was a microcosm of what the Fed is dealing with, where you had NVIDIA shares that were so strong, talking about how they're not going to be able to meet demand, how there's so much money that's being flooded into this, technology money being spent in AI. And the Fed minutes kind of reflected that to some extent, too. They started pointing through and saying, look, there are areas where there's a whole lot of demand and a whole lot of money that's being spent. So they can't cut rates right now because you're going to see inflation that's continued to push higher, not just by spending by big tech companies, but also government spending, too. But then you have the areas where if they don't get lower rates, they're in big trouble, whether that be commercial real estate and beyond, maybe some of the other banks, the regional banks that have gotten into that trouble. And so the Fed is dealing with this tale of two cities. Which side do you pay more attention to?
Right. I would say when they're look at the starting point. If we're at 5.5 on the funds rate or the 10-year at 4.5, you can argue that you can start to take the foot off the pedal a little bit. We may end up at a much higher rate. I don't know if you're getting back to what the Fed says, 2.5. Maybe that neutral rate is 3.5. The market's pricing in 4%. I think that's the point. They can start to ease off because there are cracks. They don't want those cracks to become recession.